Breaking news, asterisk, asterisk. A silent financial war is unfolding, and the weapon of choice is gold. Over the past 2 years, China and BRICS nations have been aggressively accumulating gold at an unprecedented rate, triggering concern among Western economists, central banks, and geopolitical analysts. The goal appears increasingly clear: to weaken the West's financial leverage, undermine the dominance of the US dollar, and create an alternative global financial order based on real assets, not debt. Hashtag the rise of BRICS and the return of gold. BRICS, an economic alliance made up of Brazil, Russia, India, China, and South Africa, has been making headlines in recent years for challenging Western economic dominance. But behind the public meetings, summits, and trade deals lies a much more strategic effort: the massive accumulation of gold reserves. According to official data, China alone has added over 300 tons of gold to its central bank reserves in the last 18 months. Unofficially, analysts estimate the number could be twice as high, as China often buys gold through state-owned banks or off-market channels to avoid immediate detection. Russia, under heavy Western sanctions, has also turned to gold as a strategic asset. Following the freezing of its foreign currency reserves by Western banks, the Kremlin declared that gold and natural resources would become the backbone of its economy. India and Brazil, too, have steadily increased gold imports, in part to stabilize their own currencies and hedge against volatile markets. South Africa, a major gold-producing country, plays a different but critical role, ensuring that the BRICS group has internal access to raw gold supply, further insulating it from the West market controls. Hashtag why gold? Why now? The move back to gold is not symbolic, it's strategic. In an era where fiat currencies are under strain, inflation is rising, and central banks are printing money at historic levels, gold remains a universally trusted store of value. BRICS nations argue that the Western financial system is too dependent on debt, derivatives, and artificial valuations. China and Russia, in particular, have repeatedly stated that the U.S. dollar is being weaponized, citing sanctions, frozen assets, and trade manipulation. By shifting reserves into gold, they are not only protecting their own wealth, but also starving the Western markets of liquidity and metal supply. Global gold markets are now under pressure. Western central banks, especially in Europe and North America, are struggling to replenish their gold reserves without significantly driving up prices. Meanwhile, physical gold is becoming harder to acquire on the open market, as much of it is being locked away in sovereign vaults in Beijing, Moscow, and New Delhi. Hashtag impact on the West. The U.S. and its allies are now feeling the consequences of this gold strategy. According to the World Gold Council, physical gold delivery delays have increased in London and New York markets, and large institutional buyers are facing premium markups as available supplies shrink. This shortage is not due to a lack of production, but rather a lack of availability, because BRICS countries are buying gold directly from producers or purchasing it through closed, non-transparent channels that bypass traditional exchanges. In economic terms, this trend undermines confidence in fiat currencies and weakens the credibility of Western central banks, many of which have been criticized for holding disproportionately small gold reserves relative to their outstanding liabilities. As inflation persists and debt levels rise in the West, the pressure to return to asset-backed stability is growing. But gold, the ultimate stable asset, is being quietly cornered by the East. Hashtag a BRICS-backed currency? Perhaps the most significant implication of this gold strategy is the development of a new BRICS reserve currency, potentially backed by a basket of commodities, including gold. At the 2023 BRICS Summit in Johannesburg, the idea of creating an alternative to the US dollar was heavily discussed. Russian and Chinese officials have since confirmed that feasibility studies are underway, and that gold is likely to play a central role in the new system. If successful, this could be the most direct threat yet to the US dollar's status as the world's primary reserve currency. For decades, the dollar has dominated global trade because of its liquidity, trust, and political power. But as BRICS nations rally around real assets and establish direct trade lines. Bypassing Western-controlled financial systems, the foundations of the dollar's supremacy may begin to erode. Hashtag market reactions and warnings. Global markets are beginning to respond. Gold prices have climbed steadily despite central bank efforts to downplay inflation concerns. Financial advisors in the West are increasingly recommending gold allocations in personal and institutional portfolios. Major Wall Street analysts, including those from J.P. Morgan and Goldman Sachs, have warned that if the current trend continues, the West could face a gold squeeze, where supply runs too tight to meet demand, causing price surges and economic instability. Meanwhile, small economies that traditionally relied on Western currency support may start diversifying toward BRICS partnerships, especially if a gold-linked BRICS currency is launched. This would accelerate de-dollarization, a process already underway in parts of Africa, Asia, and Latin America. Hashtag what comes next. The United States has not officially responded to the BRICS gold buildup, but senior U.S. Treasury and Federal Reserve officials have acknowledged the shift in private meetings. There are growing calls in Congress to audit U.S. gold reserves, increase transparency, and potentially revisit gold-backed instruments in the future. Experts believe the world is entering a multipolar financial age, where no single currency dominates, and trust is anchored not in politics, but in real, tangible assets like gold. If BRICS nations continue their gold-buying spree and successfully launch a stable alternative currency, the West could lose significant control over the global economic narrative. Some analysts are now calling this the silent war, a nonviolent, economic confrontation fought through supply chains, precious metals, and monetary systems. One thing is clear. Gold is no longer just a hedge. It's a frontline weapon in the geopolitical struggle for financial supremacy. This is a developing story. More updates will follow as BRICS leaders prepare for the next major summit, in which a formal announcement on the gold-backed strategy is expected.